Hey everyone, Patricio here from Abstract, and excited to be talking to one of the most intelligent uh, investors I've met, Caroline from Vitalize Venture Capital. And today we're going to talk about a lot of different things that touch on sort of what we do here in legal tech, gov tech, but also touch on what Vitalize focuses on in terms of their investment thesis, which is future of work, and how different workflows and ways of working are being disrupted and changing as technology is advancing around us. So this is going to be a really interesting conversation around what Vitalize has been seeing across different industries, sort of how that applies to legal tech and policy and government. And then at the end, of course, we're going to want to talk about AI and also how people are actually working in person versus remote, because it turns out there is no general consensus yet there. So without any further ado, Caroline, great to have you here. Would love if you could maybe touch on sort of a quick background in terms of how you got into venture capital working at Vitalize. But yeah, maybe if you can kick it off from there, and then we can sort of touch on what Vitalize is focused on nowadays.
Cool. Yeah, thanks for having me, Pat. It's hard to believe that we go back almost 3 years now. So we can maybe get into some of that history later. But in terms of my background, I grew up in Madison, Wisconsin, went to Boston College for undergrad, and then found my way to Notre Dame for grad school right after undergrad. Knew I wanted to do finance, but didn't really know what type, and so that's why I went and did a 1 year master's program. And then started my career at GE, and actually had the opportunity to live all around the world doing corporate finance at GE. I lived in Chicago, Atlanta, London, San Francisco, a number of places, and ultimately was asked to go work for GE Ventures and help incubate a startup in the drone space. At the time, I knew nothing about venture capital, knew nothing about startups, and it was just a really cool opportunity for me to kind of hit the ground running. Unfortunately, when GE started to struggle as a whole, they shut down GE Ventures and all the startups that were being incubated within. So I took that as an opportunity. I had met Gail, who's the founder of Vitalize. I had met her around that time and actually joined her back in 2018, so about 6 years ago now, and
Wow.
have been with Vitalize ever since. So we are currently on Fund 2, and we have a unique model where we also run an angel community made up of over 500 investors alongside of our fund. So we do a pre-seed angel community, and then our fund invests at the seed stage, both entities focusing on future of work, or what we call work tech.
Work tech, future work, beautiful. So, for the folks out there that aren't too familiar with the venture capital way of doing things, so usually a fund or VC has some sort of thesis that they focus on, and usually a stage at which they invest, whether it's at the idea stage, it's a couple of people or a single person just with an idea, or the requirement is they have to have millions of revenue, then they'll invest. So, Caroline, I'm wondering if you can sort of break down what is the stage at which y'all invest in terms of where in the life cycle and the types of investments, and I guess if you could touch on like future of work and what that means for you guys right now.
Great, yeah, happy to. So, for your first question in terms of stage that we invest at, so our fund invests at seed stage, and for us, what that looks like is typically post product has some revenue. Product is in market generating revenue. Usually, more than 250,000 in annual revenue is what we look for when we make a new investment from our fund. That said, I will say when we invested in Abstract in October of 2021. I believe the company was pre-product, pre-revenue, so a bit of a rare circumstance for us, but we were really excited about what they were building, and still continue to be excited. So occasionally, we'll make exceptions, but generally we invest at the seed stage, whereas I think Abstract was more at the pre-seed stage when we made our initial investment. In terms of your second question, what is future of work? How do we think about future of work? So it can be interesting in that I think a lot of folks, when they hear future of work, they think a tool or a feature or only HR tech. Or, a lot of folks I've heard invest in things like Slack bots, whereas at Vitalize, we look for real end-to-end solutions, kind of big, huge ideas that are data driven and completely transform the way something is done today. There are three main areas that we invest in. One is enterprise software that transforms workflows. So that's what I was just mentioning. The second is infrastructure for the freelance economy. So we're really bullish on the growth of the gig economy. We have seen it take off since COVID, and we think it's going to continue to grow as folks are looking for side hustles and other ways of making income. And then the third is HR tech, and so things like hiring, upskilling, reskilling, etc. Where Abstract fits in nicely into our portfolio and our thesis is within the enterprise software that transforms workflows, because it completely transforms the way something is done today. It takes a process within legal tech where folks were previously doing everything manually, and it gives them a solution, kind of an all-in-one end-to-end solution that they need to kind of completely transform the way their business is done. And so that's what got us excited about Abstract 3 years ago, and we recently made a follow-on investment into the company as well. So, but yeah, that's a little bit about Future of Work.
Which we are very grateful for. So thank you again, Vitalize. Full disclosure, Vitalize is an investor in our company, if that was not made evident already. But they definitely double down on us. I think definitely for that first sort of bucket that you mentioned, which is like the enterprise software that transforms workflows. And, in our case, it's really working with the people in these enterprises in the legal departments that are looking at public policy, regulatory changes, trying to figure out how changes in existing codes or new codes and laws are going to impact their operations, and essentially making that more efficient, and then helping uncover what they may be missing in terms of risks, regulatory risk, and opportunities. So with that, really curious to see, how AI has played into your thesis, because at least in our world, AI has allowed us to actually do the work of public policy analysts, do the work that a lot of these, legal lobbying teams would do for these corporate legal teams. So I'm curious how AI has disrupted the work in these other sort of buckets that you mentioned that you're investing in.
For sure. Yeah. AI is an interesting thing these days because it's definitely become a buzzword. And I think every company is saying that they do AI, which makes sense. I mean, we should be using AI, but what we've learned to look for, and what we've always looked for, is how is a company leveraging data in a proprietary way? So not only are we looking for a company to use AI, but how are they using it in a way that makes sense, and how are they leveraging proprietary data? And so kind of the combination of those two things makes an investment opportunity interesting to us, not just the fact that a company uses AI. So Pat, maybe you could touch a little bit on how Abstract is using AI and like leveraging proprietary data kind of side by side.
Yeah. I think this is a really timely sort of change that's been going on in like how you think about the defensibility of a product, or the need to go with a certain company or product instead of building it in-house. Because I will say a lot of the sort of workflow issues or sort of hurdles that companies have can be solved with off-the-shelf AI tools now. And there are enterprise versions of that, like OpenAI's enterprise version, and Google has Gemini, where enterprises are able to bake that into their current sort of data sets and workflows and solve a lot of the hurdles they're going through. But when does it make sense to not build that in-house? When does it make sense to contract with a third-party solution? Well, that's usually if there's some sort of proprietary data or flow that it would cost a lot more for you to build that in-house versus work with a third party. And we're seeing this across various industry verticals. In our case, Caroline, to your point, our proprietary sort of data moat is around the government laws and regulations and legislation that we're scraping and structuring. So, we don't expect any company to build that in-house. That's our expertise. So that allows us to work with any legal team or regulatory team to point our AI tool to all the current laws and all the proposed changes to laws and regulations, and allow Abstract to do the work of identifying, hey, this is what's going to be a risk, or this is what's going to be an opportunity. They can then feed that into their other AI workflows or current just manual workflows if they want. But that's a really good example, at least in our case, where there is some sort of proprietary like data moat or lake that you have to build, and that requires a lot of time and effort and know-how. And so that's sort of the discussion we've been having with a lot of companies in our space. Mm-hmm. So I assume you're probably seeing that with other companies too, like proprietary data in other spaces.
Yeah, the proprietary data is key. And I think one other important point to note, and we actually have a future of work advisory board, and this is made up of a bunch of leading industry experts that we meet with quarterly, and we kind of just talk about trends, insights, interesting things that they're seeing in their day-to-day, because these are, CEOs of leading companies within future of work, and so it's interesting to hear from their perspective. And what they're seeing right now is that companies are actually really cutting costs, and what happens when that happens is software is usually the first thing to go, and companies are thinking about, what is not absolutely critical, what can we get rid of at this time, and especially with the election coming up and uncertainty in the market right now, I think we're just seeing this across the board, especially with mid to larger size enterprises. And so what this means as it relates to venture and startups is you really have to have a need to have product, not just a nice to have, because the nice to haves are all, going away. Companies are not paying for them. And so it's interesting, Pat, maybe you can touch on how you're seeing, in your sales conversations, why Abstract is a need to have, because I think that's what we've seen with you guys, and what gets us excited about the product is it definitely has become more of that need to have solution.
Yeah, and I think like usually need to have versus want to have is always tied to one of two things, which is we need this because it's going to allow us to continue growing revenue and accelerate the rate at which we grow revenue, or hey, we need to avoid some sort of cost or regulatory sort of framework that is going to be a risk to our business. And so we've seen a lot of initial pull on the latter, which is, hey, we need to know whenever new laws come out or there are changes made to proposed laws that will pose a risk to our ability to operate our product, right? Like if there's a rental policy change in an area and I'm selling a software or a service that is tied to rents and rental policy, I need to know what's going on there. So with that, the revenue generation piece is also a need to have if your board and your company is asking you to, essentially answer the question, how we're going to keep scaling this operation, right? And what are other ways to generate more revenue? So usually we see in one of those two buckets in our case. But I'm actually curious, like Caroline, the need to have software and solutions that y'all have invested in, have they usually been tied to revenue or cost, both? Like where have you seen that?
Okay. Yeah, definitely. So what I'm seeing, it's kind of a mix of both, but the startup or the software has to be able to prove either in a tangible way, either how it's going to increase revenue for the business or how it's going to improve cost, reduce costs that the business currently spends. I think 50-50, but as long as the startup can prove exactly how much they could save the company or how much revenue they could create for the company, that's really what they're looking for. But in a market like this, I'm definitely seeing more on the cost side. Companies are more focused on cost, and they've been given targets by their higher ups to cut costs. And so if they can prove that buying a software is going to lead to further cost reduction, like that's what they're looking for at this time.
Yeah, that makes total sense. And I guess to wrap it up, I love to ask this question always, which is what excites you the most about the next 5 years when it comes to sort of what you're seeing across trends? And it could be AI, it doesn't have to be AI because everyone's talking about AI, but I'm curious, what excites you the most and potentially terrifies you about where things are heading?
This is a good question. I did not prepare for this one, but off the top of my head, future of work, it's an interesting space to be in, and it's one that we've focused on since pre-COVID, and so it's been kind of exciting to see all the different trends and shifts that have happened from pre-COVID to going through COVID and companies going fully remote at that time, and then everybody's like, what's going to happen next? And then we shifted to this like more hybrid model, and so I think one thing I'm excited for is to see how this trend is going to continue. My theory is that companies have sort of found this sweet spot where employees are really happy doing like 3 days a week at home, 2 days a week in office, or 2 days a week at home, 3 days in office. But the 3-2 or 2-3 is kind of that like sweet spot that employees are really happy with, and companies are also happy that employees are still coming into the office part of the time and they get that engagement at work. And so I'm excited to answer your question to see how this will continue to shift over time. Will we eventually move to more of like a fully remote, fully hybrid workforce? I don't know. I think that the hybrid model is here to stay. The other thing I'm really excited about is seeing a lot of mental health. I think along with this hybrid workforce, there comes a lot along with mental health. So how can you keep employees engaged and happy when they're at home and also when they're at work? There's got to be solutions that kind of address like the whole gambit. And so I'm seeing a lot in mental health and keeping employees engaged and happy and making sure that employees are feeling okay even when they're at home and you can't really check in with them in person. And so that is a trend that I'm also excited to see where that goes. And we're just seeing tons and tons of companies in this space. It's actually very hard to kind of distinguish and figure out what's going to be the winner.
Yeah, no, I definitely see it firsthand as well. Because I would say, maybe half the startups are traditionally in person, like even like the smaller companies, right? We're talking like very small, under 20 people. Half of them are all in person and the other half are remote first. And it's like, again, we're seeing pros and cons to both. But I think there's a lot of sort of fruitful advancements to be made on both ends, right? So people can be more effective at their work, but also at the end of the day, work-life balance is part of it, but it's really having sort of more flexibility around what you're able to do as it pertains to work that is software based. I will say, if you have to go in for something that is hardware or a physical type of job like that, that's a whole different discussion. But no, I totally see that. So thank you again, Caroline, for taking time to chat about all of these interesting disruptions that are taking place around us. And if people want to learn more about Vitalize and what y'all do and where you invest, what's the best way to learn more about you and the fund?
Follow us on X would be a great spot, or catch us on LinkedIn, or check out our website. We've got a couple different ways that you can contact us and get in touch with us. We also have a application for startups to apply for funding that's out there on the web. You can find it on our website. So would love to engage with anyone who is interested. Thanks so much, Pat, for having me.
Yeah. Thanks,
All right,
Caroline.
See ya.